You there?
I am.
Oh, awesome. Hey, how are you, my friend?
I'm good. How you doing?
Great. So, ladies and gentlemen, this guy I have on the phone, he's another rock star in his own right. He knows who I played with back then, but Paul ran, what was it, the largest technology fund for was it Merrill Lynch, Paul, that you did for like 20 years?
Yeah, not so long as that, but it was Merrill Lynch Investment Managers, which today is BlackRock.
I got you. And you can see Paul on CNBC often. You're a rock star because they ask you your opinion about where the market's going, and they ask you what your favorite picks are. And I'm blessed that I have you as a partner with Independent Solutions because, folks, someone like you, it's hard to get on the phone, and you have access to our clientele. And I've listened to some of your recent takes on the market. I want to share, of course, they're going to say, hey, what's the market going to do? So no one has a crystal ball, but tell me, Paul, what do you see coming in the next 6 to 12 months in the market?
Yeah, I'm actually quite bullish. And the reason I'm so bullish is it's hard for stocks not to do well when interest rates are this low. And so COVID is a good and a bad.
Okay.
Obviously, we know the bad. The
Right.
good of COVID is to fight the business shutdowns caused by COVID last spring, March and April. Our central bank, the Federal Reserve Board, took the Fed funds rate, which is essentially the baseline interest rate in the States, essentially to zero. And I expect the Fed funds rate to be at zero for actually several years. And in that case, stocks do better than bonds, and growth stocks typically do better than value stocks. We saw a similar setup when we had this environment coming out of the financial crisis in 2009. And it actually led to a bull market that essentially lasted until we had COVID strike last spring. So it's a nice underpinning. I think people think too much about who's president of the United States and the politics.
Yeah, of course.
Actually, I think the president of the United States, as far as it goes for U.S. finance, is probably not in the most 10 important people.
It's perception, isn't it? It's kind of like, I guess fundamentally, and again, I'm a lackey compared to you, but fundamentally, I'm sure we're overvalued in many areas. But it's like you said, they have to invest their money somewhere, right? I mean, they're not going to buy bonds because of the possibility of rates going higher. I mean, what do you think about bond plays for the next 6 to 12 months?
Yeah, the problem with bond is, I guess they're okay if they're just a surrogate for cash just to play defense.
Okay.
But bonds are yielding so little, very close to zip, that they're not even going to out-return inflation, which only runs at about 2% per year. And so I have a 91-year-old dad, and of course, he needs to be liquid.
Sure.
But it is very difficult for me, even for a conservative investor, to put people into bonds. What I try to do instead is stay in stocks, because I think you almost have to.
Mm-hmm.
But you invest in not my typical tech stocks, but high dividend stocks. So you at least get some income better than a bond with a chance of some price appreciation.
Yeah, because I think, look, it's not a question of if we're going to have some kind of correction. It's just a question of when. But I think because you are bullish, you still feel that we should get between 5 to 10% in equities, right? I mean, isn't that where you kind of sitting?
Yeah. The only question in my mind is, last year was so great despite COVID. The S&P total return basis was up 18%. Usually the market does 10% per year. So I worry about a little bit of taking from Peter to pay Paul.
Sure.
Maybe some of the returns were actually, pushed into 2020 instead of 2021. But, the economy is supposed to grow about 4% this year, coming out of the COVID hole, which is about 2x the rate that it was growing before COVID. Interest rates pinned to the floor. I'm not saying that I'm a conservative or a Democrat, but I'm saying that there will be less chaos. And if there's less chaos, less uncertainty, and the market hates uncertainty. And so I think we have a pretty good setup. I'd be surprised if the stocks, benchmarked by the S&P 500, didn't do at least the average, what they've done in the past, which is about 10% per annum.
Yeah, and we also had a really good third quarter, did we not? I think I saw that we had a big growth, but that was probably because second quarter was so terrible. But it makes sense to me that where are they going to invest in, and if we do have a correction, do you think it'll be because people think last year that that correction didn't last long, and that's not normal? What happened, right? From March.
Yeah, I think if we have a correction, and I don't think if we have one, it's going to be very deep or long lasting. So I would buy the dip.
Mm-hmm.
But the only thing that I see that could cause a correction, two factors. One is we have a resurgence of COVID cases and deaths,
Mm-hmm.
which I put low probability because at least now versus a year ago, we have vaccines.
Yeah.
And they're going to probably pick up the pace with inoculating folks. So that's one factor. I don't think it's that big of a risk. The other one is, and it sounds a little bit perverse coming from where we've been the last year or so, is if the economy heats too fast and it triggers a bump up in inflation, then the Federal Reserve Board, our central bank, has to go from lowering interest rates to defend the economy to raising interest rates to fight inflation. And when inflation starts to rise and interest rates start to rise, that is actually bad for the valuation of stocks. And so that's a risk, but I don't see it really as a risk, at least in the near term.
That's awesome. I think Independent Solutions has so much value to offer investors. And of course, I can't have you on the show without you touting your favorite picks going for the next 6 to 12 months. What do you really like that you think looks? I think you're still bullish on Micron. That was one of your picks, right?
Yeah. So I'm best known as a tech investor. Obviously, I always have a plan B in case tech's not working out. But I'm best known as a tech investor, and I actually think that even though the stock, since I started promoting it about a year ago, has gone from 40 to almost 90, so you would say that one is in the rearview mirror. I actually think that Micron, ticker symbol MU, is still from this price level,
right? Probably
my favorite tech idea.
What do you think about the main ones? Apple. Amazon, I think Netflix showed an incredible surge last year, and then I think you also had a comment on we still don't know the that online meeting service if you're bullish or on that stock. Zoom, yes,
yeah. So among the majors, right? They call them the FANGs.
The FANGs, right?
I probably like, out of that cast of characters, Google and Amazon the best.
Okay.
Apple's a great company, but I think too much is already baked into its stock price. And Facebook, unfortunately, is under regulatory assault right now.
Yeah.
And Netflix, they actually reported their most recent quarter just in the last 48 hours, and they crushed the estimates for net subscribers. So they're doing real well. But I think Netflix as a whole, but at its current price level, it's probably not a buy. And then you mentioned Zoom. I worry a little bit about Zoom. It's a good company, but obviously it was built solely on people doing online meetings during COVID.
Right.
And so it remains to be seen after we lick COVID, where those meetings go. How many subscribers do they retain? And so given its stock price and given those ifs, if I held the stock, I'd probably just continue to hold it, but I wouldn't buy it fresh.
Wouldn't you say that's the key to a lot of investing? Because people just want a quick fix. And, you buy companies with a long-term horizon, do you not? I mean, how often do you say, well, I loved this 6 months ago, but now I hate it. I'm going to move all my positions out of it.
Yeah, I don't do that very often, but I would tell you that if you're a tech investor, because tech products go in and out of favor so quickly,
sure,
you do have to be prepared to let some stuff go quicker than you originally thought. But typically, I invest and I set a price target to achieve 2 years out.
Got it. Okay. Well, ladies and gentlemen, the one and only Paul Meeks. When are you going to be on CNBC again? I love when they call you in.
I'm usually on every week.
I know.
Yeah, so it kind of varies by program, but I think I'm next scheduled to be on Squawk Box to do a little debate with anchor Joe Kernan on January 26th.
Man, he seems like he loves to try and, rattle you. I don't know what it is about that guy.
That's his shtick.
That is his shtick, isn't it?
Feisty. And I actually know him very well because in my Merrill days, I used to film at the studio in New York. So I'd be right next to him.
So that's what it is, right?
Now I actually film remotely.
Okay. Well, he better lay off of you, dude, or I might have to drive to New York to straighten him out. Okay. I mean,
well, I've seen you. I think you could probably kick his. You know what,
Paul? I so appreciate, and I'm so blessed that I have you as a partner. And Independent Solutions, ladies and gentlemen, the one and only Paul Meeks. Paul, I'd love to have you as often as your schedule will allow you to. Thank you so much for calling in. Any parting shots? Anything on your mind that you want to say?
No, I think the key point to remember, particularly during all this turbulence around the shift from Trump to Biden, is, as far as the market goes, not as big a deal as you think.
Exactly.
With interest rates low, I don't want to say ignore the nonsense on television about politics, but
right.
I think it's greatly overemphasized.
Yeah, remember, the world's been coming to an end for the last 2,000 years. I'm still waiting. And it hasn't happened. I don't want it to happen. But very, very well said, sir. Thank you so much. Stay warm, and I'll talk to you soon, Paul. Paul Meeks, ladies and gentlemen.
Bye.
All